Good afternoon, traders. It is Thursday, March 6, 2014. U.S. stock market is closed. Hey, we had a good day today, but a little frustrating, just like yesterday. The Dow behaved beautifully, went up, got above my red line, stayed there all day, and ended up closing up 61. That's a record high for the Dow. All-time record highs, pretty much across the board for all the indexes and everything today. Beautiful market, bull market, what I like to see, and we did very well on the positions that we brought into today. Well, one exception in BITA. BITA, remember, was very profitable. It bit the dust today, but we had other good stuff happen. And anyway, we ended up closing out almost $16,000 in open trade equity, or closed trade. Closed $16,000 in closed trades today. So that's a good day by any measure. The problem is, there's always a problem when you're trading. There's always a problem. Anyway, we are carrying negative $8,600 in open trade equity going into tomorrow. For some reason, we just couldn't get into anything that did too much. We have 9 positions, and 7 of them are negative. So that isn't good, and I don't like it. The problem with negative positions like that, they almost never get better. They just tend to get worse. But regardless, if you close out $16,000 positive, we're gonna do okay, and overall is a good day. Hey, I'll show you the charts. Okay, we're looking at the Dow Jones Industrial Average, of course, and you can see here after this big run up the day before yesterday, we had a little pullback. Didn't amount to much yesterday, but today market opened up and went right through my red line of resistance and stayed up there and never came back. So I consider that very bullish. The only way this market is going to come back down through the red line is going higher. It can't follow through and go down from here. It's got to go higher first, and hopefully it'll go higher and just keep going. That's really what I hope for. Anyway, very strong market indeed. I'll show you a couple of the trades we had. This first one was in CSUN, China Sun Energy, okay, CSUN, and this is a very volatile market, and it's a little bit frustrating. We had gotten into this yesterday toward the end of the day, and then we come in today and just look at this thing here. What's frustrating is we got in here very nicely, positioned very nicely, and we closed with about $2,500 in open trade equity on this trade. That is our best trade out of the 9 positions that we're holding. But up here, we were up like $6,000 when it was way up here, and then it pulls back and it just kind of goes to sleep. That is what's frustrating. Hey, we don't know what's going to happen tomorrow. Maybe it'll go up and take out these highs for all I know. We'll just have to wait and see. I'll show you one more here. Okay, I have to I know I showed this to you yesterday. I gotta show it again because it's just such a beautiful trade. In spite of some of the frustrations we had today, this is absolutely a perfect trade. This is in SFUN, and that's SFUN, and SFUN Holdings, I believe. Anyway, we bought this thing kind of in the latter part of the day 2 days ago on Tuesday, and then yesterday it had a big rally, pulled back a little, but then this morning it gaps up and starts to go again. And just look at this exit we had up here. I mean, we got out of this thing right at the top and before it started retreating again. So we took out over $12,000 in SFUN, and so obviously this contributed to the majority of our equity, closeout equity today. And you know, I want to emphasize this is why I have to take all these trades and be so disciplined taking them all, is because statistically we make about 60% of our trade, or of our money, of our profits, from about 5% of our trades. And this trade you see in SFUN Holdings is clearly in that 5%. And so we take all these trades and we get these things once in a while, I mean pretty regularly, and that is what keeps us very profitable. Anyway, not a bad day at all. This is Trader Bob signing off. I'll see you tomorrow on Friday.